Welcome back to another edition of This Week in 3 Minutes. I've called this one Deglobalization. No, I didn't make up that word. We'll get to it in a minute. Well, the numbers are in for 2018. It was a banner year for gold. In fact, in Canada, it was the top performing asset, beating out real estate income trusts, cash, bonds, and stocks. So gold came in at 8%. Stocks at last place down 8.9%, showing once again the inverse relationship that gold tends to have with the stock market. The reason why, if you're going to own stocks, you should own something to offset them in those down years and steady those returns. So, and by the way, here in Canada, I can't speak for other currencies right now, but this was the 5th year in a row gold had stellar performance, strong performance. Well, here's the price in Canadian dollar terms. Right now, $1,734. We're $65 away from the record high in 2011 here in Canada. A little ways to go in the U.S., but here's your prices in U.S. dollar terms. $13.20-ish right now. We had a nice pop as the Fed decided to back off its talk about raising interest rates, and of course the market rallied. Gold went up, reflecting a decline in the U.S. dollar, and silver broke through that emotional $16 barrier. We appear to be really on the move here in the precious metals world. And it isn't just as a result of declining annual output, which will be, I think, a nice smokescreen for why gold is rising against the volatility in other areas, especially political and banking. Wonder if that was planned. Anyways, the point of the matter is what's happening globally was reflected in the conversations and presentations at the World Economic Forum in Switzerland last week. Just as Lord Rothschild stated a year and a half ago in a semi-annual statement, the general sentiment is deglobalization. And what that means, of course, is the opposite of all of the countries of the world trying to formulate this supranational authority. Well, most countries don't want that, especially ones that are concerned with the loss of their culture, which is pretty much every country in the world. So what's happening is the deep concern by these bankers, who in many cases don't necessarily think the same way as the vast majority of the citizens in any country. They want the ability to be able to control the financial situation when things get bumpy or worse. And because of the limitations being set on central banking authorities, they may not be given the authority by the political powers representing the people of these countries to do what they think they should or could do to stave off some sort of financial crisis. So in a way, the fact that countries are taking stock of their relationship with supranational authorities and big bodies that are unelected in that, it may in fact be part of the driving force behind what might be the next financial situation where things get rough. And, reflective of the last crisis where they were able to stave off a global systemic event, we saw volatility, but what they stopped from happening last time, well, it was frightening how close we came to a really, really ugly situation. And these folks in Switzerland are very concerned. They may not be able to stop that from happening again. And so we're seeing that 651 metric tons of gold was bought by central banks last year. And obviously that's a reflection of growing concern around the world that maybe the next crisis may not turn out like the last one, and gold is likely going to be an important asset, as we already know. Its role now as a monetary asset along with currencies and AAA rated sovereign bonds. So the deglobalization term is something I think you're going to hear more of in the coming months and years, and it's a reflection of individuals and sovereign nations looking to have their own have some autonomy over the direction and control of their own life, I guess. So we're just entering this multi-year cycle. We'll see how it plays out for sure. In the meantime, have yourself a great weekend. We'll see you next Friday.